Yo traders, what is good? So today I've got a banging 4-hour buy and sell signal based strategy for people who are struggling a little bit and they can't be on the charts all day long. This is kind of like an algo for you, and it does work on the 1 hour and 15-minute, 5-minute. It works on all time frames, but the lower you go, more sketchy, I guess. And I wouldn't put it on the daily time frame because it's just too long. Yeah, so the max I'd put this on is 4 hour and 1 hour minimum. Okay, so there is a way to use it for scalping, and if you want to know that way, hit me in the comments and I'll give you a scalper's version of it. A lot of you has probably already seen this setup before because I seen it on YouTube years ago. But I just didn't realize how good it works on gold on the 4-hour time frame. So let's get into this shit. So basically, let me get rid of all my indicators. So my charts are this color, but for the video purpose, I'm gonna just go back to default. First thing you want to do is go on TradingView and get up the Heikin-Ashi candles on the 4-hour time frame. All right, if you don't know how to do that, you click on the bars style, come down to Heikin-Ashi, or literally it should be there next to the normal candles. So now you've got your Heikin-Ashi candles. You're going to want to go to indicators and you're going to want to type in UT bots or UT bot alerts, UT bot alerts by Quant Nomad. Click on this. Look, I've already got my colors set up to my scheme, but I'm going to put them back to normal just for this video. So this is what it looks like originally, okay? Change the color to whatever you want. That's not important. What is important is the settings. We go over to inputs and we choose 2 for the bottom, 1 for the top, okay? So key value, sensitivity 1, ATR period 2. So now we're set with that. And all we want to do is get a 50 EMA. So type in EMA, moving average exponential. Click on that and change that to a 20. I don't know if I just said 50 or 20, but I mean 20. Okay, so 20, I changed mine white and there we go. Perfect. That's literally it. So there's some rules. Now, rule 1 is we need a buy or a sell signal printed, right? So we have a buy signal there. We have a buy signal there. Now what's the difference between these two buy signals? The one buy signal's above the EMA and the one buy signal's below it, but it still closes above it. So we're interested in how the candle closes. If the candle's below it when it starts, but then it closes above it and we want to buy, we're going to get in, because as long as the next candle's green, that's our entry candle. So we need a buy signal, then we need our next entry candle to be the same color, okay? Same as up here, it's the same thing. We was above the 50 EMA. We don't get in instantly when it prints a buy. We wait for the next candle, and that's when we get in. We need the next candle to finish green as well for buys. Otherwise, for sells, is the total opposite. We get a sell signal printed there. We wait for the next candle to be printed. It needs to be red. So there's our sell signal. There's our entry signal below the EMA we would have got in. So 1, we got our buy signal, check. 2 is above the EMA, check. And 3, the entry candle closes nice and bullish and green. That's what we're looking for. So we got all our confirmations. We get in and we put our stop loss below either structure, which is the most safest place. And structure here would be below these wicks, or we got to put it at least below the EMA and the buy signal, okay, in a buy. In this situation is buying. So yeah, you can see we would have already been 1 to 2, and that would have took 5 days. So you would have been in this trade for a week just to get you 1 to 2. That's why I'm saying this is more of like a swing trade, 4-hour time frame. I will demonstrate on the 1 hour too. Let's just stick to the 4-hour for a sec. So now the next one down there, we got a buy signal. Does it close below or over the EMA? But it closes above the EMA, so that's perfect. That's one confirmation. The next confirmation is the next candle bullish, and is it above the EMA? Next candle's bullish and above the EMA, so we get in when that closes. Stop loss structure, below structure or below the EMA and the entry candle, okay? The buy signal candle. Boom. Now when do you know when to get out? Now this is up to you. First of all, I'm going to let you know right now that as soon as you are in a 1-to-1 risk to reward ratio, you move to break even. So right now this is a break even trade. Then you can either get out when a sell signal is printed, or you can get out when you've hit a 1 to 2 or a 1 to 3 or whatever your targets are. But just know that once you've hit a 1-to-1 and you're in a 1-to-1 risk to reward ratio profit, right? That's it, you're at break even. Now you can trail your stop loss. You know, your stop loss is originally there. Change it red because it's a stop loss. Your stop loss is originally there, then you get to a 1-to-1, you drag your stop loss there, you're at a break-even trade. Now, if you get about this far in profit, you can move your stop loss. You can just drag it as you choose. Keep it below these Heikin-Ashi candles, right? So, yeah, that's up to you. But beautiful trade, another beautiful trade. Now, would we have took this sell position? No. There's a few reasons why. One, because we're above the EMA, not below it. And two, well, no, actually, that is the only reason. What am I talking about? We're above the EMA. We're in an uptrend. Like, we're not taking sells. If this was closed below the EMA, then yeah, we would have got in. So let's take a look now at a sell example. So we got our sell candle. Boom. There's our sell signal. Now the next candle doesn't really close strong, but still, you know, is a red candle. So technically we get in based on my rules. So we get in on this candle close, stop loss at least above the sell, the printed sell signal. So another candle, the actual signal label. There we go. We put it there. Another beautiful trade. Absolutely beautiful. Now let's take a look at another example. Right, here we go. So there's a loss. There's a loss. I can see a loss right now. This buy signal. We're above the 50 EMA, the 20 EMA, sorry. Check. The next fucking candle's green. Check. But you could have got in, right? You would have lost. Definitely. So stop loss there. You would have lost. Is it okay to lose? 1,000,000%, because that's part of trading. You're never going to ever get a strategy that works 100%. But out of how many trades? 1, 2, 3, 4. So far, out of 4 trades, we've won 3. Okay, so would we have took this sell? No, we wouldn't have, because we're above the 50 EMA once again. Right, would we have took this buy? Absolutely, we would have took this buy. Because why? You should know by now why. 1, it closed above the 20 EMA. 2, the next candle was green. We get in. Stop loss below the buy label. Not the candle, the actual label. There we go. Another fat dub. Take a look at this example. Would we have got in on this sell there? No, we wouldn't have got in on this sell. Why? Because the candle didn't close below the 20 EMA. The next candle still doesn't close below the 20 EMA. But more importantly, this actual signal didn't close below the EMA. So we don't get in. We write it off. It's unlucky. We get in on this one. Yeah, beautiful. You know the rules by now. I'm not going to keep saying them. Stop loss below the buy label. Look at it. Absolutely beautiful. Another avoided loss because we don't close below the EMA. And we don't take this neither, because the candle didn't close. The actual signal candle didn't close. The entry candle closed. So, you know, you could have, you know, if you did take it, you would have won. But I like the actual candle that prints the buy or the sell signal to close above or below the EMA. But still, this would have been a dub if you went off of the entry candle, whatever. But for me, I wouldn't have took that trade. So I'm just going to get rid of it. Sell signal. Beautiful. Absolutely beautiful. Look at them. All the rules are aligning. You're in. Stop loss above the label. Monster. Did we get in on this? No. Another avoided loss. And I ain't cherry picking this. This is literally from today's date. I'm just going back from today's date. This is all recent price action. Literally, this would have worked out so beautifully. So another avoided loss. What do we have here? A dub. Buy. Signal check. Closes above the EMA, and you've got a green candle after it. Stop loss below the label. Almost a 1 to 2. Perfect. You'd be at break even anyway, regardless. Here we go. I think there's a loss right there. Maybe. We'll take a look. No, you got your entry there. I mean your signal there. Boom. It closes below the EMA. Check. The next candle is red and really strong. Check. We go. So let's just say we got in at the bottom of there. Stop loss there. Instantly reverses on us. We lose. And that's okay. There is ways to avoid this. The only way to actually avoid it is to understand you're in an uptrend. You don't want to be taking sells in an uptrend. Simple as. You just don't want to be taking sells in an uptrend. But if you ain't very good with market structure yet and highs and lows, then that's fine. You could have just took this simply and take a loss. It's okay, because now I'm going to go back and see how many times you would have lost out of how many trades. So it's 1, 2, 3, 4, 5, 6, 7, 8. So out of 8 trades, we got 2 losses, right? Or if you know about market structure, you wouldn't have got in this anyway, because, you know, you would have been waiting for it to break below this level there, this low. So, you know, you might not have even taken this trade. So out of 8, we got like 7 wins, maybe 6. But look at it. Let me tell you why it's working so beautifully. because it's in a trend. Now, does it work like this in a consolidation? No, it doesn't. So consolidation zone, we're going to find a consolidation zone. I'm going to show you how to deal with it when price is consolidating. So I class this as consolidation. Why do you think I class this as consolidation? Let's just take away all the signals and just look at price action. So you got price refusing to make a new high and make a new low. Just stuck in a box. So what do? We wait for price to either break below and then give us a retest and a rejection and come down and start a trend, or vice versa. We wait for it to break out like it did and continue up. So that's all we do when we get consolidation. We don't trade in it. And another way to spot consolidation is by looking and seeing, right, we've got the EMA just in the middle of price. The EMA should be below price or above price, okay? So that's a few ways to spot consolidation. We just wait. You don't want to be taking these trades, okay? But let's just say you did. Let's just go back. The first signal that it printed, whoa. The first signal that it printed, let's just follow our rules. Imagine that you just did, because one, the buy was printed and it closed above the 20 EMA and the next candle's green. So let's just say we got into it. Now, remember what I said, you can either put your stop loss below the buy or the sell actual label or below structure, all right? If you're a below structure kind of person, you wouldn't have even lost. You put it below structure, no, this consolidation wouldn't have even bothered you. You literally would have been okay. If you put your stop loss, like I do, below the buy label, more than likely would have been wicked out with this wick there, and then look what it does. It's okay because, like I said, we can't win them all. But this is where you need to figure out, are you going to be putting your stop losses in the safest place possible, which is below actual structure and the wicks like there? Or are you going to be more risky and try and get more of a reward and put it below the labels? Totally up to you. You figure that out. But in consolidation, once you get caught up in it and you understand, right, I'm in a consolidation, I'm going to keep losing, you wait for it to break out and you wait for the EMA to be back underneath or above price. Okay? Like this. Perfect. So let's look at some sell examples. Like, look at this. Look at this. Oh, wait, let's look at the messy ones too. I don't want to skip the messy ones. Would we have got in this sell? Nope. Didn't close below the EMA. Simple. It's as simple as that. Would we have got in this sell? Yeah, we would have 1,000,000% because of what I just said. Close below the EMA. Second candle's the entry candle. Stop loss above the label. Boom. Tell me this strategy is not flames. This is an interesting one. Did this close below the EMA, this candle? No, it didn't, but look at it. Worked out beautifully. But still, I wouldn't have took that trade because it didn't close below. Would I have took this buy? No, I wouldn't have. I wouldn't have took this buy because even though it was green, it's got a red outline around it, and that red outline means that if I take the beauty bots signals off now, the candle's going to be red. So technically it's a red candle and after it. So if it's got a red outline around it, that means the candle's actually red. And if a red candle's got a green outline around it, that means it's actually green. So, you know, even though the trade still would have been a winner, I probably wouldn't have got in on this trade. Yeah, the trade would have been a winner. I still wouldn't have got in on the trade. But you could have if you wanted to, because the UT bot signal told you, right, I want the candle to be green, even though it is red, I still think is green. And that's what's good about this UT bots. They're amazing. They're actually so fucking good. There's a loss. There's another loss. If, you know, you go off of what I said before, are you taking sells in an uptrend? But you shouldn't be. But even if you did get tricked out on this one, because the wick did come quite low, then, you know, you would have lost. So, you know, we got about 3 or 4 losses out of a whole load of wins. You got to understand the win rate's going to be insane compared to the losses if you actually stick to the rules. So, yeah, this is a beautiful buy. I wouldn't have even got in, but look at it. Stunning. Wow, if you caught that, that would have been fat. But this is an interesting one too. Maybe this would have been a loss. So we got a buy signal. Check. Both green candles. Get in. Stop loss there. So there we go. Another loss. 2 losses in a row maybe. But when we win, we really win. But look at this. Probably a lot of bad news going on. This is very, very sketchy and horrible and ugly looking. And sometimes you can't avoid this stuff. Do you know what I mean? It's just as part of trading. But when shit works and you stick to your plan and you don't overtrade, if you lose, you lose. You wait for the next quality setup. You'll be fine. Like look at when it does start working out. Stop loss below the signal, the entry again. I'm not getting out until I see like a sell or the EMA crosses back over. So I'm getting out around about, but there, 1 to 3, beautiful. Am I getting in on this trade? No. EMA told me we're not getting in. Do you know what I mean? Like, just understand that when we're consolidating like this, there's nothing much anyone can really do apart from drop down time frames. Now I've done the 4-hour time frame. Let me show you on the 1-hour time frame what this would have looked like, and if we could have got some trades. So this is what it looked like on the 1-hour time frame. When we're consolidating on a 4-hour, we might be able to get away with getting some trades on the 1-hour time frame. So let's take a look. We have a sell signal. Next candle's red. Cool. We could have got in. Stop loss above the label. There we go. We hit a 1 to 3 before we even lost. I mean a 2.4 before we even lost. Do we get in on this buy signal? Yes. Again on this buy. Boom. Another 2.6. You know what I'm saying? Like, there is ways to catch these trades. This one would have been interesting. What would this have been? You got in on this consolidation, even though it's nasty as hell. Could have been a break even, could have been a loss. Do you know what I mean? But the best thing to do is just stay away from nasty, wicky looking price action like this. Yeah, so another way you can use this strategy is by basically using it as wait there, 2 sec, multi-time frames. So, you know, you could say, right, let me just show you what I mean. You get a buy signal on the 4-hour time frame, okay? Now let me just go to the 5-minute time frame. So let's look back to where that signal was printed on the 4-hour. Okay, so the signal was printed in this area on the 4-hour. So one of these buy signals was that 4-hour signal, okay? Boom. Let's just go 4 hours from the first buy signal. So there it is. So, but there's where you would have been getting in from that 4-hour signal. This is the candle close. Say you did get in, stop loss below this EMA, or, you know, this little red wick there. Look at what you could have potentially caught, like with your sniper entry. You go back to the 4-hour time frame now. You could have potentially caught all of this, a 1 to 17, because you got a fucking buy signal on the 4-hour time frame. You got in on the 5-minute time frame and had a tight stop loss. Look at this. So the possibilities with this indicator are wild. But yeah, am I going to be using this when I'm live trading and stuff? 100%. I'm going to implement this into the gold strategy, because I'm going to be, you know, live trading in a gold room as well pretty soon. So I almost forgot to mention as well, one of the like most important things of this fucking strategy that you can do. So if you don't know how to set alerts and alarms, come up to the alarm tab there, press the plus sign and choose the UT bots. So UT bot long means, you know, buy, and UT bot short means sell. And I think there's another way to do it too. We go to price and then we just click on value, UT bots. There we go. Buy or sell. So yeah, that's probably the best one. So, you know, if you know that you're waiting for a buy signal because we're above the EMAs, you just go and click on buy. You know that we're below and we're crossing over the EMAs and looking for a sell. Do the total opposite. Come up to the value, UT bots, sell. Boom, there we go. But if you think this video was good and you're going to give it a try for yourself and test it out, then let me know what you think in the comments. Also, let me know if you want a more up-to-date fire version where I add another indicator just to make it that bit better, and it really does make it more better. Let me know in the comments. Also, let me know if you're more interested as well in how to get these sniper entries from the 4-hour down to the 5-minute and get them really big, fuck off 17 risk to reward ratios and shit, because they're possible. All right, so let me know what you want in the comments, and you know I got you. But until next time.